Hi everyone, and welcome to the first Pepper Asset Finance webinar for 2026. My name is Nicole Hitch, State Sales Manager for New South Wales here at Pepper Money, and I'm delighted to be hosting today's session. Before we begin, I'd like to acknowledge the traditional owners of the land on which we meet today and pay my respects to elders past and present. Today's webinar will run for around 30 minutes, and I'm pleased to be joined by Ken Spellacy, Pepper Money's Chief Executive of Asset Finance. Many of you will already be familiar with Ken. He joined Pepper Money in 2015 and brings more than 25 years' experience in the asset finance industry, having led sales, credit, and operational teams across a range of senior leadership roles. In 2025, Ken was appointed Chief Executive of Asset Finance, where he now oversees the strategic direction, operational delivery, and financial performance of the business. Prior to Pepper Money, Ken held senior roles at Capital Finance, St. George, and Westpac, and over the past decade, he has played a pivotal role in shaping and accelerating the growth of our asset finance business. I'm really looking forward to unpacking with Ken some of his key insights, results from 2025, and the trends and opportunities shaping asset finance as we move into 2026. So with that, I'd like to welcome Ken. Good morning, Ken.
Good morning, Nicole, and what a great introduction. Thank you for that.
Yeah, a lot about you.
Yeah, how good, how good. But first of all, thanks to everybody who's taken the time to join us today. It's hard to believe it's been a year since we did the last one.
Absolutely. So I guess in saying that, before we focus on 2026, it would be remiss not to touch on the results of 2025. It was a challenging year for the market, yet our asset finance business delivered strong growth. Can you talk us through the key results from the year, what drove that momentum across consumer, commercial, and novated leasing, and tell us why that gives us confidence heading into 2026?
Yeah, it was a challenging year and probably not quite as we expected. I think we were leaving 2024 hoping for RBA rate reductions, easing of cost of living pressures, and good times for all. We didn't quite get all of that. We got some RBA rate reductions, but cost of living kept going and a few other challenges throughout the economy. Pleasingly, though, Pepper were able to shake off most of those market challenges and delivered some really strong initiatives. We had weekend settlements come into play. We really extended our True Auto approval through novated. We had fantastic results in novated leasing where we're seeing upwards of 80% of our applications flow through with no human intervention now. We started the journey on commercial. We've got some more work to do in that space, but we've started and we're continuing to put the building blocks in for consumer as well. We continued to invest in our technology. You know, a big thing for us has been make it easy for our introducers to deal with us, and we continue to look for ways to help that technology to smooth the process. Our always on campaigns, I think that gave us something really unique for our sales team to be always in market, always have something to talk about, always have something for our introducers to show that there were more solutions to help their customers. And our sales team were busy. They were busy engaging and in some instances re-engaging with brokers right around the country. And all this enabled us to deliver record volume. $3.5 billion we originated last year, which was up about 20% year on year and well ahead of system growth, which was really pleasing.
Fantastic. So really strong results there, Ken. And speaking of which, NPS was another strong highlight. Given how important broker feedback is in shaping how we operate, can you talk us through what drove those NPS results in 2025 and what you see as the key call-outs behind that performance?
Yeah, we've always really valued our broker feedback. We take that feedback on. It helps us shape our strategy for the coming years, and it confirms for us that we are delivering in the right things that make a meaningful difference. And, you know, last year we set ourselves an aggressive target of, I think it was 30, and we absolutely smashed that by reaching a huge score of 45. And in an NPS world, you know, there's not too many better results than that. Some of the key themes that came through quite strongly were our market-leading BDMs, which, as I said, that was a clear strategy. We wanted to be out there on the ground, always communicating, always helping our introducers, not just to find a deal, but to add real value to their businesses. Also, fast and efficient settlements. Again, we've worked really hard on our settlements team. They put in a heck of a lot of work, working long hours through the week and over the weekends to refine those processes, to be able to get the money out the door as quick as possible. And it was great that we received the acknowledgement there. And building valuable long-term relationships. Again, something that's been near and dear to me and to the whole Pepper business over 10 years. It's really important that we strive to deliver real value and lasting relationships. We're not here just to do the one-off deal. We want to actually build long-term relationships and add meaningful value to the partners that we do business with. There were great results from last year, but rest assured we won't be sitting idle. We're going to continue to deliver for our introducers and partners. But these results tell us we're certainly doing a lot right, which is really pleasing.
Absolutely. All right, so now let's turn our attention to 2026. There's a lot shifting across the asset finance landscape right now, from economic conditions to customer expectations to advances in assets and their technology. From your perspective, Ken, what are the key forces driving change this year, and what do those shifts mean in practical terms for our brokers and the customers they support?
Yeah, look, I think all the buzzwords are still there for sure. But I think there are a few key topics really to focus in on. Firstly, and positively, the market is still forecast to grow, which is great news. Despite some of the challenges we continue to face into, and most recently, I guess the RBA decision to raise interest rates again yesterday, that's going to put more pressure on people and consumers and SME. There's no doubt about that. But we are still forecasting growth within our industry. But I think the way that growth occurs may be a little bit different, and it's going to be different for different parts of the country. And we're going to see different expectations for different industries within the marketplace. If we look at the consumer side of things, I think used cars will remain strong and in high demand. Affordability is a key factor for customers, and whilst they may not be able to afford the brand new car, they'll be looking for quality used cars. Having said that, cheaper new cars, I think, are really going to continue to fuel growth. There are plenty of models coming into the country, and that sub 40,000 area is now a real battleground for growth. We've seen the likes of Chery, JQ, GAC, Suzuki, BYD, MG, you name it. They'll certainly be striving to push more and more affordable new cars into the market, and I think that's going to continue to help things grow. In the commercial space, I think there's a lot of businesses that will need to upgrade their assets, and potentially we've seen customers holding on to assets probably longer than usual as we've gone through that high interest rate and high cost environment. They're now going to get into a situation where they really need to refresh and upgrade those assets. So that will create some demand throughout the commercial landscape. And I think that energy transition comes into play as well. So you've got EVs for vans and trucks and buses. You've got charging infrastructure, whether that's on site for those businesses or the public charging domain. We need to really double down on that if we're going to keep up with the forecast growth of EVs. Renewables play a big part with solar and batteries. And then you've got the electrified equipment, particularly in industries like mining, construction, material handlings. I think we'll see some big uptake of those new assets in that space. And cash flow management will be a key and top of mind topic for many SMEs. So having said all that, I still think there's plenty of opportunity in the market for growth. It won't be as easy as it might have been a few years ago. But for those brokers who are close to their customers, understand their customer base, understand what their needs are, and can provide the right solutions, there will be certainly opportunities for growth there. We also see, we've talked about EVs. I mentioned that just before, and EVs and the continued push of Chinese manufacturers, something we've talked about over the last couple of years, and it's certainly playing out. China last month became the largest source of new cars in Australia. It went past Japan for the first time in 28 years. So the Chinese influx of new models into the country is not just something we're talking about now, it is absolutely being experienced, and they continue to come. We've seen brands like BYD, Chery, GWM, JQ, all having really strong success, and there are many, many more lining up to come in behind them. And again, I'm sure there have been many households around the country talking about EVs, particularly in the past few weeks with the conflict in the Middle East, pushing up petrol prices, RBA increasing rates. People are going to be looking for opportunities that, where they can save money. And, EVs is certainly an area that they can look to do that. There's FBT exemptions, certainly makes novated leasing a very compelling proposition for EV purchases. And the price point, as I said, many of these cars, they're much cheaper than Japanese and European models, and they certainly have a lot in them. So I can see that continuing to fuel growth as well. The other thing that I'd touch on is, and I think, brokers should really be talking to their customers about the changes to superannuation payments. Something that hasn't got a lot of attention, I think, in the media, but certainly payday super is probably the biggest change we've seen in decades in this country. And for those that are not aware, up until now, businesses have been able to pay super 3 or 4 times a year. From the 1st of July this year, they will now need to pay those employees super on their payday. So if they're getting paid weekly, fortnightly, or monthly, those super contributions are going to have to be paid at that time. So that can potentially cause some cash flow issues for SMEs, but hopefully they have been planning it and preparing for it. But if not, brokers should be out there talking to them and seeing how they're going to move into that new world. Not only they're going to need to make sure their cash flow is in order, they're going to need to make sure they've got robust payroll systems to be able to manage those changes as well. I think that's a great conversation for brokers to be having with their SME customers, and again, really adding value to their business and looking at how they can help them through these significant changes.
Fantastic. Thanks, Ken. And I think that really highlights the importance of having those meaningful conversations with our customers in order to keep ahead of the market. And so speaking of which, regulation is an important topic in asset finance at the moment also. We've got new products, digital processes, and changing economic conditions, which means regulators are constantly refining expectations around disclosure, responsible lending, and broker conduct. What are some of the recent regulatory changes in asset finance that brokers should be most aware of, and how might these changes impact the way they do business?
Yeah, look, I think regulation is a never constant in our industry, and I think rightly so. But it's important, and it's something we shouldn't really be worried about, provided we're generally looking after our customers and doing the right thing. But there are a few key focus areas I think that ASIC and AFCA will be honing in on. Responsible lending obligations, that's obviously been in their sights for some time, but they're continuing to drill down into that and making sure that not only lenders, but intermediaries are doing all the right things and asking the right questions of their customers as well. I think commissions and fees is something that is up in headlights, and particularly making sure that they're disclosed so customers know what is actually being charged and what are the costs involved. They're looking at lenders to have more oversight of intermediaries in terms of how they're performing and what processes and controls that they have in place. And vulnerable customers. That's definitely something that regulators are looking at. How are these vulnerable customers being managed? How are they being sold finance? How are they being sold motor vehicles and so on. So, buying a car can be an emotional time. There's no doubt about that. And for some, it's the biggest financial obligation they may ever enter into. So, I understand that we all want to take that customer off the market as quickly as possible, but we need to be careful not to be pressuring them into anything. The last thing anyone needs is to either try to unwind a contract or to have a customer fall into an early default situation. So we need to be doing our due diligence, all of us, within that process. And it may mean asking a few more questions and gaining some more information, but that's what we have to be doing to make sure that we're doing the right thing. And there's a lot of attention on customer complaints. And again, my recommendation in that place is to be sure that we're having full open discussions with customers, provide them with options. Don't just push them into one particular line, but to show them what the options are, and explain everything to them. Don't take for granted that a customer is going to understand, what's being explained to them. So we need to go into some detail and explain things very clearly. Keep notes would be good. Quite often, the complaints that we hear, customers are saying they didn't know what they were entering into. So if you've done your job and you've followed processes, you've kept notes, you should be in a really good position not to have to worry about those sorts of things coming back in the future. But there's no doubt there'll be more compliance for lenders, brokers, and dealers, and that may add some complexity. It may add some additional questions, may add some additional cost into the process as well.
Thanks, Ken. And so now for the words on everyone's lips, artificial intelligence. AI is becoming an increasingly hot topic everywhere, and asset finance is no exception. From your perspective, how is AI already being used in asset finance today? Where do you see it having the biggest impact over the next few years? And what should brokers expect as AI becomes more embedded in the way we do business?
Yeah. AI, again, is one of those clear buzzwords that we've been talking about for the last few years. There's still some unknowns with AI. There's fear in the market, I guess, and fear for everyone. Is AI replacing humans? They probably will in some shape or form in certain areas. But I think it's those that adopt AI and those that understand AI and how you can have that integration between AI and humans that gets the best outcome. At Pepper, we've been using AI across our business in many areas for the past few years, slowly increasing that capability and learning how to extract the most value from it. And excitingly, this year we've invested in an AI team. So we've got full-time resources now within Pepper, looking at the best use cases across the business and developing and enhancing that capability, which is fantastic. And this year in particular, specifically in asset finance, you'll see AI being used throughout customer service, taking phone calls and assisting with those straightforward requests. And some of that voice AI is brilliant. You struggle to know that you're actually speaking with AI. So we'll see that roll out throughout the business. We'll also see it within our credit assessment. And having it, as I said before, having an integrated AI and human process will enable quicker decisions and hopefully better outcomes, more consistent outcomes for brokers and customers. So there's some of the key areas that we're working on this year.
Fantastic, very exciting. And so finally, Ken, let's bring the conversation back to our partners. Our introducers play a critical role in our success. So as we look ahead to 2026, how are we, Pepper, stepping up the way we support them, whether that's through products, technology, service or insights? What can the people watching today expect to see from us this year?
Yeah, look, I think it's going to be another really exciting year for Pepper and for our introducers, which is great. First and foremost, we're going to have more BDMs on the ground, to be assisting and working with you to help get deals done. We really want to continue to drive that. We had a great, I'm probably biased, but I think we've got the best BDM team in the market. We've got a great team out there and being really active at the moment, and we're going to continue to double down on that and have more people, more boots on the ground, making more contact with our brokers and helping them get business done. We're going to continue to invest in our technology. That's something that we can never just sit back and rely on. We've got lots of very positive and strong feedback about our systems and processes, but we need to continue to invest and we need to continue to stay ahead of the market. And we're going to continue to expand our True Auto approval that I spoke about earlier on. We've got fantastic capability within our novated processes, but we want to see that same capability replicated throughout commercial and consumer. And we're absolutely committed to delivering more straight-through processing in the credit and into settlements. By the end of this year, we'll have automated settlements. So not only will our credit applications be passing through with no human intervention, so too will our settlements. And when you combine that with what we already have with real-time payments and weekend settlements, it's going to make it a very, very compelling offer to be putting your business to Pepper. As we said, speed, efficiency, and getting the money out the door as quick as possible will be some key highlights for us this year. We'll also be launching new products and very exciting. The first one to come off the ranks very soon will be Guaranteed Future Value. It's something that I'm very excited about. And Guaranteed Future Value is something that's not new in the market, but the way we're going to be doing it it'll be brand agnostic. So we won't be aligned to just one brand or one model. There'll be many brands and models that we can support on a GFV basis. And it'll be the first time that we're taking GFV to the broker market. So again, it's been the domain of motor dealers and OEMs. Brokers have had to sort of compete against that. We've now got an opportunity for brokers and to bring GFV to more people across the country, which I think is really important in a time where there is a lot of uncertainty about motor vehicle values into the future. We're pushing into EVs. We're not sure what the future of ICE looks like. So to have a Guaranteed Future Value product at your disposal, I think provides customers with a significant benefit. We're also working on other products. I'm not allowed to talk about those too much at this point in time, but what I can tell you that they will be market-leading products and they will enable our introducers to provide more solutions to their customers.
Fantastic.
And similar to last year, one more thing, there'll be more webinars. There'll be more insights being shared across the course of the year. Because again, we want to provide our introducers with as much information as possible to help them succeed.
Fantastic. Thanks so much, Ken. It's been incredibly valuable, lots of really practical insights, and it's genuinely exciting to hear such a clear and confident view of what's ahead for our introducers and the asset finance business. So for everyone online, just a few quick next steps. We'll send the recording of this session out to you in the next coming days. And I encourage you to reach out to your designated BDM, who is always on hand and ready to support you. And if you have any questions from today, please feel free to filter them back and we'll get back to you in due course. And finally, keep an eye out for our next webinar in the series. The invite will land straight in your inbox. On behalf of the Pepper Asset Finance team, thanks for spending part of your day today with us. Have a great rest of your week and we'll see you next time. Thank you.
Thanks all. Bye-bye.